I know Strazza's got a big rave crowd following.
Who's me? I take a lot of trips to Miami. Yeah.
Where do you think Alcatraz came from?
I like to party.
What's happening, everybody? Welcome to the Flow Show. It's your boy, Chicago Sean, joined as always by my man, Steve Strazza, our head of technical research. Steve, what's happening, my man?
Not much, dude. How's it going?
Oh, just basking in the glow of another great weekend. It was my son's 8th birthday this weekend.
Oh, wow. You and JC. Big birthday parties this weekend.
Yeah. Well, what was JC's birthday party? His kid, or was it somebody else's? It was somebody else's, right?
No, his daughter.
Oh, okay. All right.
And I have a July birthday too. So next year we can just do like a joint birthday party.
I have a July birthday also. Why don't we all just celebrate in July?
Yeah. Big party.
Big fishing trip off the Keys, I think, next year.
There it is.
There it is. We've only been talking about it for 3 years, doing a fishing trip off the Keys.
Yeah. No, we're going to do a team building exercise.
Yeah. Sure we are. All right, so here we are. This is the Flow Show, where we dig into any unusual options activity that we've detected over the past week to see if that can lead us down the rabbit hole into some interesting trade ideas. So Strazza, I'll let you lead off here. What's anything sticking out from this week's report?
First thing that stood out is, I know you like this one. You wrote about gold miners, I believe, yesterday morning. GDX, bullish flow last Thursday. So that's, I think you wrote about the junior miners. This is the gold producers, or the standard gold miners ETF, GDX. They were active in August 26th, 2550s.
So they were buying calls?
Yep.
Somebody knows something, huh?
Yeah. So let's look at some charts.
Yeah, let's look at some charts. I got the GDXJ chart up on my screen. Looks like you got a longer term chart there. That's good.
Yeah. So it broke the lower bounds, GDX and GDXJ, right? You see that right here. But if you look at gold, just spot gold, we use the ETF here. It's holding in, right? And like we were just talking about before we came on, Newmont breaking down beneath the lower bounds, kind of violating that support. Like maybe that's the final flush. That's probably the largest weighting in GDX. I don't know for sure, but it's one of the largest, definitely. So earnings bombed yesterday. Stock sold off a lot. Maybe that's putting some sort of floor into GDX. You have a nice momentum divergence. I like this for some mean reversion if gold holds on back to those pivot lows.
Yeah, I will say that since we broke that 2883 level there that you're showing in GDX, excuse me, since we broke that level, we have seen options premiums elevated. In fact, I've been playing some short premium plays in GDXJ in recent weeks. Just doing some strangles. In fact, we put a new one on yesterday because the volatility has been juiced in these options. Now, I'm playing for more of a range-bound play. Particularly, I don't know if you have a chart there of GDXJ, but I can bring it up on my side. I mean, this is the vehicle I've chosen to play or to use. GDXJ feels like it's kind of found a little bit of support in the last couple of weeks.
You see that transition from just downward pressure to sideways.
Right. Now, as an example of the trade I put on yesterday here is I sold a straddle where I'm short the 25 puts, which are comfortably below current market pricing. And I sold the 35 calls, which if you see on my chart, that kind of corresponds with where the 50 period moving average is here. Also corresponds with this level that was support back in May. So is this trade a guaranteed winner? Of course not, but I feel pretty good about my chances here. Being short premium, we sold the September options. I think we got $1.25 for that spread, if I'm not mistaken. We'll see what happens, but I'm betting on volatility cooling off a little bit here in the gold complex.
Yeah, and so look at where we came from. GDX, GDXJ, they're both down about like 40% from their April highs. Been moving straight lower. So a little counter trend action, a little mean reversion is really all you need and all you're looking for. We have the dollar, which has been on a tear, finally looking like, maybe it's going to correct a little bit, cool off. You would think gold can finally catch a bid. And it looks, when you zoom in, you're seeing on your chart here, this kind of sideways action, a little bit of basing over the very near term. And I really like momentum, which you can see on my chart here. We didn't really get oversold at these most recent lows. So,
And look, I'm not saying that the fact that there was some bullish options activity taking place here, I'm not saying that's the reason I'm in the trade, but I will say that that makes me feel a little bit better about my short strangle because I'm more concerned about further downside here than I am of upside. And if we've got big players stepping in and making speculative upside bets with calls here, that makes me feel a little bit better about maybe the downside is not too much further from here.
I couldn't agree more. Yeah, I like that one.
All right, what else you got, buddy?
So just some things that stood out. Let's go back to the list. Oxy, talk a lot about Oxy internally and externally at All Star Charts. It's been a strong stock, big winner for us over the past year or two. And we're in a trade right now, right?
We are in that trade. We are in a bull call spread. We're in the October 60-90 bull call spread. This is a trade we got into on April 13th to be exact. So if I go back on my chart here, we got in right about this date here. So we haven't made a whole lot of headway from where we got in, but we got a lot of time. We have until October. And it's like I said, it's the 60-90 bull call spread. So it's a position that isn't quite working out for us yet, but we got plenty of time. It looked like it was going to. Man, we had a nice little run there in late May, early June. It was looking like this thing was off to the races, and then the market had a different idea.
So here's the thing about Oxy. It's all gonna come down to energy, right? So I'm just throwing up a ratio chart. This is showing the relative strength of Oxy relative to other energy stocks. Okay. This has been a leader since energy bottomed in late 2020 and started rallying. Oxy just keeps making fresh legs higher and showing more and more relative strength and outperformance against its peers. So if energy is going to find a floor, right? So XLE and crude, if they're finally going to bottom here, XLE is off 20% from its highs, bear market territory, trying to kind of stabilize here. If it's going to find a floor and work higher, Oxy is a name that I think you really want to be in because that's leadership, right? So you would expect them to continue to lead and show strength. Well, whether or not that's going to happen, though, is another question.
You're making me feel better about my position. Like I said, we have until October, so I'm not terribly concerned about it. I like the trend, the overall trend. It feels like it's carving out that base and might be setting up for another leg higher. Either way, Strazza, it's a defined risk bet. We made our bed when we got into the trade, and we know what we can lose, and we're comfortable with that. That's the beauty of putting on trades like that.
So moving on down the list, some other fun names. Should we even bother talking about pot stocks? Canopy Growth Corp. Want to know what this looks like?
If for no other reason than to make our friend Brian Lund happy, let's talk about pot stocks.
Yeah, I think we were talking about Tilray with him. I think it was last week. Tilray had like one good up day. A lot of people got excited. What stands out to me when I look at Canopy is, man, I remember when the stock IPO'd. Crazy to think it's been like, 7-8 years now? So it's like late 2014. It's right back to its IPO price, 95% drawdown from its highs.
Wow. I mean,
industry leader here. This is your industry leader.
That's your industry leader. Well, I mean, I think JC would agree with me when he looks at that chart and says, look, yeah, it might be cheap, but until it gives us a reason to get long, and I don't see a reason right now, it feels to me like it's a no play.
Yep. So that name stood out. I would very much agree with you. This is, trying to catch a falling knife. Not really for us. Back to the list. Bearish activity, bearish flow in Coinbase. The reason I wanted to point that out, I think that's really interesting. Coinbase is all over the news today. Not sure if you heard. SEC is kind of coming out and trying to say that they're operating some sort of an illegal exchange. In dealing with crypto assets. Somebody probably knew something. There was a lot of bearish flow in Coinbase last week ahead of this. That news came out today. Stock's down over 10% last I checked intraday. I think you want to stay away from a stock like Coinbase. I don't think you want to short it here. I think getting long is not for the faint of heart either. It is basing though. If it's going to make a new low and take out, I guess it's May lows. Sure, you would have to expect another downside leg, but similar.
Here's my take on Coinbase. Looking at this chart, and all those reasons you said are top of mind for me as well. This stock is, going to be headline driven probably for the next little while here. Any headline could come out of the blue and send this thing soaring or send this thing crashing, right? The cheaper this stock gets, the more of a takeout target it becomes. Same with Robinhood, right? We've talked about that in the past. So as an options guy, if I wanted to play coin, either long or short, all right, I would probably limit my trades to defined risk bets, maybe just buying calls or maybe just buying puts, and that's it. The problem, though, as you can see in my chart, is if you're just buying straight calls and puts, you're paying through the nose in terms of volatility right now. So that makes it a very challenging environment. That I still think if I was hell bent on getting short here, I would look to do it with long puts because, like I said, this stock could trade down to $25 next week, and you're feeling real good about your short position, and then boom, Morgan Stanley buys them out for $100 a share or something stupid, right? Exactly. And you get killed.
Yeah.
If you're long puts to express a bearish bet, at least your risk is defined. You know the most you can lose. And on the flip side, if you're bullish for maybe those same reasons, do it with calls. Define your risk. At least know what you're what you're willing to lose.
I would very much agree with you. Couldn't agree more. I don't like the idea of shorting the stock. If you're going to do it, long puts, just like you see in the table. I think that probably makes the most sense.
Yep. Well, I agree with you. What you said in the very beginning there is it feels like a no play.
Yeah. The headline risk is insane.
I don't feel compelled in either direction on this stock right now. I do feel like it's kind of a hands-off move. Hands-off spot right now.
So of this list from last week, the long setup that we went with in yesterday's post was actually Constellium. If you want to pull up that chart, I have, this is the way we're looking at it here. That's CSTM. It's an aluminum producer, I think out of like France, Germany, somewhere in Europe. This is a nice bullhook candidate, right? Those 2018 highs, in this case, it's 2019 highs are so important. Those pre-COVID highs. We undercut them, we're beneath them right now. This could be a beautiful failed breakout if we hook higher, get back above that 15 level, really clean chart. I think there's upside at least maybe 33% back above 20.
We're sticking with bullhook, huh? I thought we wanted to maybe call it a scoop and score.
No, the bull scoop is something different. JC and I are still figuring it out.
I heard that Spaces yesterday. I heard you guys talking about that. It was funny. Okay, well, when you first brought that name up, my first thought was I'm not familiar with this stock. So I assumed that there would not be too much options availability. But as I pull up this options chain, that I do see that it trades weekly options. So that's interesting, but as I'm opening up these chains, I don't see a whole lot of open interest.
There's like nothing.
Yeah, I mean, this is confusing because there's practically zero open interest, but the bid-ask spreads are pretty tight for there not being any volume or any open interest. That's very curious.
You don't see that very often, right?
No, I'm very surprised by this. Like here's like an at the money call. I mean, 55 by 80. It's a little wide with a month expiration, but it's not egregious. I mean, when you see a stock with options open interest of zeros, if you look at this column here, you see all these calls. These are all zeros.
Right.
You would normally expect to see bid-ask spreads you could drive a truck through, but this is not that bad. Not that bad. So I don't know I don't know. I mean, I guess we could get fair fills here. I've never traded this one before. All right, let's look at the nearest. Okay, well here, if we go into August, I mean, there's open interest here in August.
Okay.
That's where all the open interest is lurking. I mean, did this thing like just recently start trading weeklies? Because none of these weeklies have any open interest.
That'd be the case. It's only a $2 billion stock.
Yeah.
Mid-cap stock.
Okay. But I mean, like the regular monthly August expiration options have good open interest, but the Septembers don't. Like here, I'm looking at September. There's just nothing there. So very curious. I don't know.
And here's the thing with that, right? So for follow the flow, as you know, we're just buying the common, and crafting trade setups around purchasing stock. This is not the best vehicle to put on an options trade for this. This is a cyclical stock. It's aluminum stock. We can find a number of other names that are far more liquid and optionable. Something like Freeport-McMoRan should move very closely to this.
Mm-hmm. Well, look, Strazza, I like to leave our audience with at least some kind of trade idea or some kind of lesson. And if we uncovered a lesson here, Strazza, that would be one of the things that we certainly pay attention to before we put a trade on an options trade is we want to see, does it have a liquid options market? And in the case of this Constellium, I would argue it does not, even though it does list weekly options. And usually when you see weekly options, that tells you that there is liquidity there. But I mean, unless my open interest is lying to me across the board, I mean, I see nothing but zeros in so many places. So this is a stock I would be very hesitant to put an options trade on. And if I were to put an options trade on, it would be something very simple, like a one-legged, just buying long calls or buying long puts. That's it.
So I used to audit the financial instrument valuation tables, all these different derivatives. And boy, this is over 10 years ago now. It was one of my first years out of college. And we had like a audit consultation over an issue. Basically, there was no volume in the options that the market maker I was auditing was putting out. And we had to basically say to them, if there's no volume in there, it's not worth anything. Nobody's coming to buy it. It's fine if you're offering a bid and ask for it, but nobody's buying it. We can't put down a value for these, far out of the money types of options that were worth a couple pennies, but they had a lot of them. So, was somewhat material, but yeah, reminds me of that.
Right. Well, there you go, folks. Stick with liquidity. Keep an eye on open interest because you never want to get caught in a trade that you can't get out of when it's not going your way. So there you go. That's our lesson, Steve.
I like it.
The more you know. Was that thing from NBC? All right. That's it for this week's Flow Show. Thanks for tuning in, everybody. Thanks for joining me, Strazza. We will catch you again next week. Trade 'em well, everybody. Take care.